Okay, good afternoon, folks. I'm getting the stream started a little late. It's 12:08 Arizona time, so it's about 2:08 Eastern. About 40 minutes into the trading session after kind of returning from the lunch hour. I was going to be back on at 1:30 Eastern time. It's 2:08. The Dow is down 160. That's about 0.6%. Almost 0.7%. The NDX is up 0.8%. The composite's up 56 basis points. The S&P is down 0.2%. The Russell's down 0.3%. The yield on the 10-year is 2.904. VIX is now below 20 by like 4 pennies. 2 pennies now. So it's come in. VIX volatility on the Russell has also come in. Volatility futures, I think, are about where they were trading. I don't remember the exact figures that we were looking at. As far as the futures themselves, I mean, the mini Dow futures are down 200. The mini Nasdaqs are mini Nasdaq are up 0.6%. The mini S&Ps are down 0.3%, and the mini Russell's down just between 4 and 0.5%. I was this morning I mentioned, pay attention to the bond auctions. The Treasury has about, and I'm drawing a blank on the figure, $258 billion, I think it was, of auctions coming up this week over the next 3 days, so today, tomorrow, and the day after. And all of the auctions that I've seen so far that have completed today resulted in higher yields. And the ones that occurred today were all offerings that are at the lower end of the curve. So they were the shorter dated offerings. And just to give you an idea of, specifically which offerings we're talking about, I'm going to pull them up here on the app that I use to track economic data. It's primarily for Forex traders, but I find it helpful for pretty much commodities stocks. There's, economic data that comes out can affect multiple asset classes, will affect multiple asset classes. But the auction on 4-week T-bills, the previous yield was 1.36%. This auction ended up at 1.38%, so 2 basis points higher. The 3-month auction was 1.57. It came in at 1.63. The 6-month auction was 1.785. It came in at 1.82, and the 2-year note was 2.066. That came in at 2.255. So a little over 2.25 from just a little under 2 and 1/10%. So yes, yields are rising. No one is really surprised. Now it just boils down to, do traders believe that yields are rising because there's an inflation story, or is this just a short-term condition? Does it mean that the Fed is going to follow up with more hawkish interest rate policy? Are they going to derail the stock market rally that we've been experiencing since March of 2009? No one knows the answer to any of these questions, and if they do, check your pocket, check your wallet. Make sure you still got your wallet, because I don't think they can be trusted. So before I turned on the live stream, I was actually in a quick NASDAQ trade. I had mentioned before breaking for lunch that the NASDAQ was about to be a short according to the 15-minute chart, and it kind of delivered what we wanted, but didn't start to deliver what I wanted until just now. So right at about 12 o'clock, before I turned the stream back on, was when this bar started forming. So the stochastics had traveled up here into overbought territory. And the thing is that once you're in overbought territory, like, you can initiate a short, but be prepared for it to go against you quite a bit. That's why I don't like to do that. I like to wait till I have some kind of confirmation that it is a valid short. So we did get what I had called for. I thought it would have happened earlier. And I think part of the reason why it didn't was that I had underestimated what we were seeing on the 1 hour chart, which is this continuing to trade up from a momentum perspective. So that's why it's important when you're judging your trade on a certain time frame, look at the time frames on either side of you and make sure that they line up, make sure that they support what your conclusion is. So where we stand right now in the 15-minute chart is we've got this bar which is forming red, and it's touching the 9-period moving average. And this bar will close in less than a minute. I doubt it's going to close below that moving average. 2, 1, 0. And it closed right on the moving average, which is what it does because it can never give you a definitive answer. But it's now trading below, and it could very well trade back up above. If you look at the stochastics, trading below it is not in the cards right now because this is signaling a long. This chart here is signaling a potential long. But this chart here is signaling the opposite. So whenever you have consecutive charts that don't line up, expect some chop. If you had all 4 charts that were showing an oversold or overbought condition and they were both showing momentum definitively moving down, then yes, that's your short opportunity, but that rarely ever happens. They don't usually line up like that. You usually have to wait for one of them, the shorter term one, to come back. Like, you can have a situation where oversold here, overbought here, overbought here, overbought here, oversold here. So you wouldn't want to short it because it's going to go against you, and you wouldn't necessarily want to initiate a long play because I don't like to go against the trend that's forming in the next adjacent bar. I like to, you've heard the trend is your friend. That's, usually if you draw a trend line, like if I were to do so here, and just draw myself like, a trend or a price channel. That's my price channel. And generally, if I want to play the trend, I don't like to trade counter trend rallies. So this is an overall downward trend. This would have been a valid play to the upside. I'm not saying it wouldn't be. I prefer not to play those. I prefer to play it when it hits up here as a potential short, but I'm also using other indicators as confirmation of that. So if I'm seeing it's trading up here to the top end of this channel, but I see really bullish stochastics, then I might be waiting instead to see if it's a breakout, because they do happen. Breakouts from price channels happen from time to time, and you don't want to get caught in that. On the other hand, when you see it trade up to this price channel, and you've got, let's just say that this were bought here, trending downward here, trending down from an overbought condition here, that would tell me, yeah, the chances of it breaking out of that price channel to the upside are pretty slim. I think I'm safe putting a short on, and if I put a short on here, then I gotta, where am I gonna set my stop? Like, how do I know when I'm wrong? And if you're willing to take that risk, like, you know that you're gonna risk $100 to make 400. I'm just using round arbitrary numbers. But if that was the risk, like risk to reward was, I'm gonna risk 100. If I'm wrong, I know if I cross back above this MA, I'm wrong. That's a 100-point move against me. But if I think it's going to trade 400 points if I'm right, that's a trade worth taking. And realistically, price breaking out of this price channel is not a coin flip. You know, it's more like more like 4 to 1. It's not going to do that. But today's shaping up to be a good day for me. I mean, emerging markets are down, and where that's helping me is on my short call, because I have 3 long contracts that expire January 2019 at a 26 strike. I sold 3 calls against it. Those are March expiration 46s. VWO is at 47.90 right now, so you know, somebody could, if they wanted to, call that away from me. Not that anybody will do that so far away from expiration, but they could. I'm going to keep an eye on what VWO is doing. If it does what I think it's going to do, which is it's going to trade down to a certain point, I can buy these callbacks for a profit and then bounce back up in my favor. That's what I'm really hoping for. Looking at the charts, the month chart tells me there's still some upside momentum. This chart is a wash for me. It's not really telling me one thing, you know, one way or the other. This 4-hour chart is telling me, yes, some price softness. If I look at the shorter term, you know, the 1 minute, the 4 minute, the 15, the 1 hour, bullish, bearish, bullish, bullish. So I think my play here is I'm anticipating trade down to this midpoint. Although looking at this, I might want to consider redrawing this trend line. I think this was a weekly. This was drawn based off of the weekly, yes. So actually, no, I want to stick with this. What I'm unsure about this has been trading in the bottom half of this channel. Now it's come up across, but it hasn't traded up to the upper boundary. It's kind of weakened and gotten pulled back. This Fibonacci is drawn from the low point of the current channel. That's the reference point that started this channel. This is the next reference point. Okay. A rebound off of 50.99 tells me potentially a trade down to the 23.6% fib retracement, which would be below my strike. And I realistically don't know if that's going to happen before March expiration. What I do think is that this is going to travel down at least to the midpoint, if not a little bit below, before I can buy back my short call and let my long call continue to do what it's been doing, which is, you know, bringing me in some profits. I had bought into VWO and was upside down on it, you know, before the rally started in the beginning of 2016. And then I sold two or three, not sold, bought two or three calls in addition to the shares of VWO that I owned outright. I don't have those anymore. I had sold calls against them and they got called away. But I still have the long calls, and that's what has actually swung me to an overall profit. So while I was talking about that, look what just happened. We traded up out of the channel. Now, if we were watching this, could we have predicted that? A run up from here. This run up from here. I don't know that I necessarily would have predicted that. So what that illustrates is the importance of having that stop defined. You know, as confident as you are, like if everything, the way you're reading the charts tells you that it's going to hit that upper boundary, upper end of the price channel, and then trade down, you know, keep with the trend. No matter how confident you are, you have to have an exit plan in case you're wrong. Because if I just assume I'm right and I walk away and I come back, now I find out that this thing is ripped against me, and if I was prepared to accept $100 loss, you know, from 68.20 to 68.26, that is about 120 if I'm doing the math in my head right. Because that's 6 points on the index, just about, from 68.20 to 68.26. There's 4 ticks per point, so 6 times 4 is 24. 24 times 5 is, it's $5 per tick is your profit or loss. So that's 120. So now what we're seeing is this starting to weaken. But this and this tell me I don't want to short. This still has some moving up to do. Now, if you believe me, my theory that the slow stochastic doesn't let up until it doesn't like any unfinished business. The business in this case is moving down, taking momentum below the oversold area. But you're looking at it across time frames. Right now, the stronger factor is that the fast stochastic has crossed below the slow stochastic on the tick chart, 333 ticks. Ticks are transactions, so that means once 333 contracts are traded, then this draws a new bar. So it's not a time chart, it's a transaction chart. This is a time chart, 1 minute. This is a time chart, 4 minutes. This is a time chart, 15 minutes. So the charts, the stochastics on these charts can look very different. So now we're seeing a bearish stochastic crossover here, a forming bearish stochastic crossover here. If this continues, we're going to see the slow stochastic continue. It's going to get a chance to finish its business. So we just got confirmation on both of these charts that this is now a play to the short side. Now I don't know if I want to do that yet because the trend chart is drawn differently on the tick chart because it's not time dependent, it's transaction dependent. So you can't always go off of that. If I look at the time chart, which is where I drew this in the first place, this can trade down here, but then is it going to bounce up off of it or is it going to trade back down into it? We don't know. That's always the question to ask yourself. Like if I was looking at this, just this, and I would say, I'm bearish on this. I think it's time to get into a short position. But before I do, I have to ask myself, what could it do to hurt me? Just because I see this doesn't mean that's what's going to happen. What can it do to hurt me? Obviously, it can move up. Is there anything in the 4, the 1, or the tick chart that tells me that's even a possibility of happening? And even if those charts tell me it doesn't look like there's a possibility of happening, there's still that slim one. Like you don't want to. You're never going to go in without a stop. Whether it's a mental stop or a stop that you actually put on the chart. So I was going to say if we get a close above here, which is the 27 period MA, but I'm also looking at the 4-minute chart, we'd have to also get a close above this 9 period MA for us to consider that there's clear blue sky all the way up to 6834-ish, which is the top end of the Bollinger Band that's forming. Here the Bollinger Bands are coming in. Here they're still widening, although slowing. And if you've been watching others of my trading streams, you know that I don't like it when I'm stuck between two moving averages, because they do what you're seeing here, which is just a bounce back and forth. Now this one created below, and if you had taken that as a signal that the move was now to the downside, you would have been partially right until it hit here and then bounced right back up again. So it made that move down, but it didn't close above it. Or sorry, it didn't close below it. It's got to close below it for that to be for you to take that as confirmation. Checking in on our averages now, the Dow is down 178. The NDX is off of its highs, as is the composite. The S&P is still down 0.25%. The Russell's down, call it 0.4%. VIX is now back above 20 by a penny. The volatility on the Russell is much more bullish than on the S&P. 9% gain on the RVX. The dollar index is now up 0.7%. It was down before we broke for lunch, I think about 0.5%. So it's strengthened. Gold has weakened. Now would be a good time to look at, remember the trend lines that I drew this morning at the beginning of the trading day on my favorite, the futures I watch? The Australian dollar is now breaking below. It's closed below it. Which is usually pretty good confirmation. And it looks like that's the play. Not right now, of course. Because why? Because of potential reversal here, potential reversal here. This one's going to take longer to get to. And this is really looking more still mildly bullish. The pound futures have traded up and above. So if I were to look, there's probably some headline at 11:52 Eastern. Which is 9:52. So no, not really anything here other than the FTSE closing on a down note. So not necessarily going to adjust that, but going to mark it as a violated trend line. And here on the euro, we're still in a coiling pattern. So I probably wouldn't touch this because it's really not clear what way we're going to go. I mean, you could try drawing a trend channel, but that's still not incredibly helpful. Because what you want to identify are high probability setups. You don't want to find something like, well, yeah, that kind of looks good. I think it's going to go up. That's not, you have to be more rigorous than that. So for example, this Japanese yen, what I want to do is I want to wait till it comes down to about here and then see if it's going to trade through or bounce. And I can almost guess, based on the stochastics, it's probably going to be a bounce. Weakness here, trending down here with a fast stochastic, some, bullish influence. So crude oil now kind of testing the lower boundaries. The API number comes out at 4:30 Eastern time.